Good evening, ladies and gentlemen. Thank you all for joining us in tonight's webinar, organized by Investing Note and Share Investor, and in collaboration with Societe Generale. We have a very exciting program lined up just for you, but before we dive into it, in case you did not know, we are organizing our Active Trading Tournament 2024, and it is running until 30th of August. This is a once-a-lifetime opportunity where participants get to pitch themselves with some of the best traders out there, improve their trading skills, at daily leverage certificates, and learn from each other on how to generate better returns. There are also many fabulous prizes to be won, including vouchers and a brand new iPhone 15 worth $1,300 when you join the tournament and place at least one trade. We have one more week to go before the tournament ends, so click on the link in the chat box or head over to Investing Notes website to register now, and you might just be one of the many lucky winners in this exciting challenge. Back to tonight's webinar, we have invited not just one, but two heavyweight speakers who are well known in the financial sector, and they are none other than Marcus Ng, Vice President of Societe Generale, and Robin Ho, Top Tier Remisier at PhillipCapital. Now, Marcus will be sharing tonight on the important insights on DLCs, including the potential risks, practical tips that you should take note of when trading daily leverage certificates. And Robin will then be the second speaker, following up on shedding some light on the market outlook on both Hong Kong and U.S. markets for the remaining of 2024. Now, without further ado, let's welcome our first speaker, Marcus, on screen. Marcus, over to you.
Okay, hi everyone. Let me share my screen first. Okay, hi everyone. So thank you for joining us today for this session that is really riding on the tournament. Those of you who are really participating in the tournament, you would have a feel of what the DLCs are. So for us here today, for me, in the next 20 to 30 minutes, I want to share with you guys about what the daily leverage certificates are, what you can, how it works, and what it can offer you in terms of your trading portfolio. All right. So the very quick introduction first. My name is Marcus. I'm from Societe Generale. We are a French bank, one of the largest French banks. We do have a large suite of structured products that we have listed on the European exchanges. Okay, so we are a structured products powerhouse, and we have brought that experience here into Asia. Hong Kong side, we do have our structured warrants as well as CBBCs. On the SGX, we have this daily leverage certificate. All right, so DLC, daily leverage certificates, DLC for short, are listed and traded on the SGX securities market, and you can access them through your regular stock brokerage account. So either POEM's trading account or Tiger Brokers or Mumu, you can trade the DLCs on your broker platform, as same way that you would trade your DBS shares or UOB shares. All right. So these DLCs are SIP, specified investment products. So you must be SIP qualified before you can trade the DLCs. All right. So in this session, I'm going to go through a bit of the basics of DLCs. For those of you who are already trading in a tournament, you would have a feel of it. But let me go, for those who are new to it, let me just re-emphasize how it works, this fixed leverage product, DLCs. And then I'll go on to our website, dlc.societegen.com, to run you through how to navigate through our website, how to find more information on our website, as well as how to select the right DLC for your target exposure. All right. So DLC's daily leverage certificate is a fixed daily leverage product. The payoff is very similar to your TQQQ or your SQQQ. So for those of you who trade leverage and inverse ETFs, the TQQQ in the US, the Progress Ultra, Nasdaq 3 times long and short ETFs, these DLCs have exactly the same payoff as a leverage and inverse ETF, where every day it gives you that fixed daily leverage on the underlying assets daily percentage performance. Okay, so this one is not a warrant, not an option. It does not have that kind of in the money, out of the money, at the money kind of concept. All right, this is more like a leverage and inverse ETF, where you can have every day the fixed daily leverage on the underlying asset performance. All right, so there are two types of DLC. One is the long DLC and the short DLC. So you can trade both directions of the market. If you are bullish, you will buy the long DLC. But if you are bearish, you will buy the short DLC on the underlying asset. All right. So remember, you always initiate your position with a buy trade. You either buy the long DLC or you buy the short DLC to initiate your position, whether you are bullish or you are bearish. Okay. And this leverage factors, we have 2 times, 5 times, and 7 times. So for single stock DLCs that track a single stock, it is up to 5 times leverage only. But those DLCs that track an index underlying, Hang Seng Index or the STI, we can go up to 7 times leverage. All right. So these DLCs I mentioned are traded on SGX like a share. You can trade it through your regular stock brokerage account. So you will visit SocGen website to find out which DLC you want to trade. You'll find out what is the stock code of the DLC, the 4-character stock code of the DLC. Then you use that stock code to go and retrieve the DLC on your broker trading platform, and you buy and sell the DLCs on your broker trading platform. All right. So you do not open an account with SocGen or anything. You will trade the DLCs on your stock brokerage account, Mumu, Phillip, Tiger, etc. Any regular stock brokerage account that same way that you would trade your DBS shares or your UOB shares. Okay. And we are the issuer of this DLC, SocGen. We issue them, we list it on SGX for people to buy and sell. We are also the designated market maker. All right. So this is a regulatory term. We are a designated market maker that is obligated by the exchange SGX to provide liquidity on all 200 of our DLCs every single day, as long as the underlying asset is open for trading. All right. So we do have to provide liquidity every day. We provide liquidity every day. Even if there's no traded value on the DLCs, we will have that bid and ask prices and that bid and ask volumes throughout the trading day. As long as the underlying stock or underlying index is moving, we will provide that bid and ask price, bid and ask volumes for people to buy and sell the DLCs. All right, so this is a very common misconception on the DLCs where some people see that, oh, this DLC today has no traded value. Does that mean there's no liquidity on it? That is not true. All right. So even though there might not be any traded value on it so far that day of the DLCs, we will provide that bid and ask prices and the bid ask volumes, that liquidity over there for you to buy and sell the DLCs. All right. So do not have the misconception that no traded value means no liquidity, because that's not true. We will still have that bid and ask prices, bid and ask volumes, that kind of liquidity for you to be able to transact on the DLC. So you'll never be caught in a position where you have no liquidity, you can't sell or you can't buy the DLCs. If the underlying asset is open, we will provide the liquidity, all right, during SGX market hours. All right, and then another misconception is that people say that, oh, daily in the name, right? So does it mean that the DLCs can only be traded intraday or only held for one day? That's not true. The DLCs can be held for a few days, a few weeks, but this is still very much a short-term trading instrument, all right? So intraday, a few days or a few weeks, but you do not hold the DLCs for months at end or even a year. This is a short-term trading instrument that can complement your overall portfolio. Okay, so I mentioned that we have over 200 DLCs listed on SGX. SocGen, we have listed over 200 DLCs on the SGX, covering 3 different markets: Hong Kong, Singapore, and the US. On the Hong Kong side of things, we do have the 3 key indices: Hang Seng Index, Hang Seng China Enterprises Index, as well as the Hang Seng Tech Index. All right, and these indices, we have 5 times and 7 times long and short DLCs on them. We also have the big China tech giants: Tencent, Alibaba, Meituan. Also on the old economy stocks: Ping An, Hong Kong Exchange, Sunny Optical. So this, we have a broad range of Hong Kong stocks available for you to go long or short with up to 5 times leverage. All right, so there's a 5 times long and short DLCs on the single stock names. On the Singapore side, we do have the 2 indices: the STI index, as well as the MSCI Singapore index, up to 7 times leverage. And the stocks, we do have most of the STI constituent stocks, except for the REITs. All right, your Singapore banks, CDDF, Sembcorp, Capital Limited, we do have 5 times long and short DLCs on them. And the latest addition to our shelf has been the US indices DLC. So you can go 7 times long and short on the NASDAQ, S&P 500, as well as the Dow Jones indices. All right. So our most actively traded DLCs have always been the Hang Seng indices DLCs. So 7 times DLC on the Hang Seng Tech Index was our most actively traded DLC last year, as well as this year so far. All right. So because of the volatility of Hang Seng Tech Index, you do see a lot of intraday trades. 7 times leverage on a 3% move on Hang Seng Tech Index, which is quite common on a daily basis. It's a 21% move on the DLC, and that can generate a lot of trading opportunities for more active traders out there. All right, so Hang Seng Tech Index DLC have been our most popular DLC so far, most actively traded DLC so far. All right, so I want to go into the basics of the DLCs after that introduction to help you understand how the DLCs work and why you should really understand how the DLCs, the leverage works before you trade the DLCs. All right, so that's the whole point of the simulation tournament as well. I hope that through the simulation tournament on the Investing Note platform, you're able to understand how the DLC performance work and be able to, and that will translate to your actual trading in the markets on the DLCs, and that will greatly help that. All right. So the DLCs have a very simple formula in terms of its leverage performance. The formula is the daily percentage performance of the underlying asset times by the fixed leverage factor, 5 times or 7 times, will give you the daily percentage performance of the DLC. Okay, so it is this simple formula. Every day on a close-to-close basis, the performance of the DLC will track the underlying assets, stock or index, daily percentage performance multiplied by the leverage factor. So over here, BYD stock, for example, is up by 2% on day 2 versus day 1. On a close-to-close basis, BYD is up by 2%. My 5 times long BYD DLC is up by 2% times by 5, 10%. Right? So 5 times leverage, it will give you that 10% gain on the 5 times long BYD DLC. While on the 5 times short BYD DLC, you'll be down by 10%, because remember, this is a leverage instrument. Your gains are magnified, but your losses are also similarly magnified. Okay, so leverage instruments, please be careful. Please exercise your trading discipline, position sizing, to make sure that you are comfortable with the risk that you are taking. Okay, so this happens every day on a close-to-close basis, where my 5 times long, DLCs will track the underlying assets percentage performance by that 5 times leverage factor on a close-to-close basis. Okay, so every day you'll give you this performance. Whatever the underlying asset performs in the percentage terms, we'll multiply by 5 times, and that will give you the performance of the DLC every day on a close-to-close basis. Okay, keyword here is on a close-to-close basis. Okay, so this is an example of Alibaba Long DLC, DKPW. This is a screenshot of our website, dlc.societegen.com. I'll show you guys later. So DKPW is the stock code of this Alibaba 5 times long DLC. All right, so in the name of the DLC, you can find out a lot of information about the DLC. The underlying asset that the DLC tracks will always be at the front of the name. So this DLC tracks the Alibaba stock listed on Hong Kong Exchange, followed by the leverage factor. So it's 5 times leverage, and whether this is a long DLC or a short DLC. So remember, if you are bullish, you will buy this long DLC. If you are bearish, you'll buy the short DLC. All right. So after the direction of the DLC, long or short, comes the SG. SG stands for Societe Generale. We are the issuer of this DLC, followed by the expiry in year, month, date format. The expiry is usually quite long dated, 1 year, 2 years, or 3 years, because we do have to have if I could have a choice, we would not have an expiry on this DLC. It will be open-ended. Unfortunately, due to regulations, we have to have an expiry on this date. But the expiry does not impact the performance of the DLC. All right. So it does not like warrants or options where close to the expiry, the time decay will accelerate. And if it expires out of the money expiry, the warrant or option will be expire worthless. But the DLC, the expiry does not affect the performance of the DLC. Every day, the Alibaba DLC will track the Alibaba stock performance with the 5 times leverage on a close-to-close basis every day from the day it's listed all the way up to your expiry date. At the point of expiry, whatever the value of the DLC is, we will cash settle it back to investors through the SGX CDP side. Okay, so you will be cash settled at the end, whatever the DLC value is at the expiry. All right, so this screenshot over here, you can see that the Alibaba Long DLC is up by 7.65%. On the back of Alibaba stock gaining 1.45% on that particular day at 9:55 a.m. on 23rd of January, just 25 minutes after the market opened on Hong Kong Exchange side. Alibaba is up by 1.45%. My DLC is up by 7.65%. That's where the 5 times performance is. All right. So this is to show you where the 5 times performance is. But if you have bought the Alibaba short DLC instead, DFTW, you would have suffered losses of similar magnitude. So the Alibaba short DLC here is down by minus 7.36%. While because the Alibaba stock is up by 1.45%. All right, in between the two arrows, you can see over there a very important figure that's called the last intrinsic close. So every day, SocGen, we will publish the intrinsic close of every single one of our DLCs. After market close around 6 to 7 p.m. in the evening, we'll publish this intrinsic close of every single DLC, which is the mark-to-market value of the DLC every day. That will be used as a reference price for the next day's leverage performance. Okay, so if the next day Alibaba goes up by another 1%, my short DLC will be down by 5%. It'll be down 5% from this 0.448 intrinsic close from the day before. Okay, so important figure over there for you to see, and that's why the website is very useful, which I'll show you guys later. All right, so a lot of people use the DLCs to trade the Hong Kong stock underlying. Right, these DLCs are listed on SGX and traded in Singapore dollar terms. So it gives you that convenience. You don't have to change your money into Hong Kong dollars just to trade the Hong Kong stocks, to get exposure to the Hong Kong stocks. You can trade these DLCs that are denominated in Singapore dollars to be able to gain exposure to Hong Kong stocks. All right, so you have the familiarity of the Singapore SGX trading infrastructure, and you don't need to change your money. You don't have to go through the hassle of changing your money. You can just trade it all in Singapore dollars terms, but you get exposure to the Hong Kong stock performance. And you're paying SGX exchange fees. So SGX has a very cheap exchange fees for the DLCs as compared to their stocks. Stocks is at 4 basis points, but DLCs, the exchange fees is 8 times cheaper at 0.5 basis points. All right, so this SGX trading fees is much cheaper, and you're not paying Hong Kong exchange fees. You are paying SGX fees when you trade the DLC. But most importantly, this DLCs gives you that capital efficiency and cost efficiency when it comes to trading Hong Kong stocks or getting exposure to Hong Kong stocks. Take, for example, a BYD stock itself. Right now, if you want to gain exposure to BYD stock, the minimum lot size is 500 units. And based on my recent calculation, you have to spend almost $20,000 Singapore dollars just to gain exposure to BYD stock itself. While you might have that $20,000 to go and buy BYD stock, but you might not want to do it all at one tranche, correct? You might want to scale in your position, maybe put in 5K, 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 5K over 4 tranches. And also, if you're going to trade BYD stock very actively, in and out throughout the day, or hold it for only one night per se, it'd be more efficient to use the DLCs, which are minimum lot size of 100 units. All right, and the DLCs are generally priced between 20 cents to $2. So you can get exposure to BYD stock with as little as a few $100s by trading the DLCs. All right, and we're using less capital to trade the DLCs to get exposure to BYD stock. You're also paying less transaction costs and less transaction fees. So you have that capital efficiency where you use less capital, you can gain exposure to BYD at a fraction of the cost of actually trading the BYD stock itself. And by using less capital, you are able to save on your transaction costs and your commissions, etc. Okay, so that's why we believe that so far in the trend for the DLCs, the Hong Kong stock underlying DLCs have been our most actively traded range. People do see the benefit of using the DLCs to gain exposure to Hong Kong stocks. Of course, other than the fact that the Hong Kong underlyings are very much more volatile than Singapore underlyings, but you do have that volatility to give you more trading opportunities. But over here, you can see where is the capital and the cost efficiencies when using the DLCs to trade Hong Kong stocks. All right, but one thing to note when you're trading Hong Kong stocks is that Hong Kong market only opens at 9:30 a.m. and closes at 4 p.m. So only during 9:30 a.m. and 4 p.m. SocGen we will market make on our Hong Kong stock DLCs. SGX market opens at 9 a.m. So between 9 a.m. and 9:30 a.m. we will not be providing quotes on our Hong Kong underlying Hong Kong stock DLCs. And after 4 p.m. we will not be providing any more quotes for our Hong Kong stock DLCs as well. Okay, so I mentioned that DLCs are short-term trading instrument. So you can either intraday trade it, day trading, which is a lot of people do use it for the DLCs, or you can swing trade, which is position trade, which is like a few days or a few weeks, or you can use it for your hedging purposes. If you hold a big bag of these stocks in your investment portfolio, they're not going to sell. It's a buy and hold strategy, but you see some short-term headwinds coming in, and you want to hedge that, you can use the short DLCs to hedge. So example over here is an intraday trade on the 7 times long Hang Seng Tech DLC, ILKW. So on this day, on 11th of January, the Hang Seng Tech Index gained 3% between 9:15 a.m. and 1:45 p.m. on that day itself. So a half a day trade, you would see that on the back of the Hang Seng Tech gaining 3%, my 7 times long Hang Seng Tech DLC, ILKW, gained from 50 cents in the morning and opened to rise up to 61 cents in the afternoon, in line to give a 21% gain, 7 times that of the Hang Seng Tech Index performance of 3%. So you can buy, if you have bought in the morning at 50 cents, the ILKW, you can sell it back to SocGen in the afternoon at 61 cents, at 1:45 p.m., 61 cents, to knock in that profit of 21% gain. All right, because Hang Seng Tech went up, and your 7 times long Hang Seng Tech DLC also went up with that 7 times leverage factor. Okay. But if you're more of a swing trader, you're not going to do an intraday trade, you want to hold it for a few days or a few weeks, the DLCs can serve you well as well. In this example over here, between the 5th of March to 20th of March this year, 17 trading days, Tencent rose by 13% across these 17 trading days. All right, so Tencent was a nice uptrend, gaining 13%. And my 5 times long DLC on the Tencent stock, DUWW is the stock code, rose from 4.9 cents to 8.5 cents to give a 73% gain over this 17 trading day period. Okay, so for those of you who are sharp, you will see that 30% done by 5 is 65%, right? How come my 5 times long Tencent DLC got 73% gain? Well, remember that the 5 times leverage, 5 times performance is on a coast-to-coast basis. But if you hold the DLC for more than a day, in this case, you are subjected to the compounding effect feature of the DLC, where the gains are compounded, over here in this example, to give more than the 5 times leverage and that 73% gain over that 17 trading day period. All right, so compounding effect is a very important feature of the DLC, which I'll touch on later on in this presentation. Before I go there, last example is hedging. So shorting is not for everyone, but for more sophisticated investors who know how to trade both sides of both directions of the market, you can definitely find a lot of use for our short DLC range. All right, so in this example over here, Alibaba fell by 10% over this 7-day trading day period, and you are holding Alibaba stocks itself. You are holding a big bag of Alibaba stocks that you want to hold and buy and hold for the long term, because you believe in the growth story in China, etc. You want to hold it for long term. You don't want to sell Alibaba stock. You can use the 5 times short DLC IXJW to hedge your exposure in the short term. All right, you can see that IXJW rose from 53 cents to 87 cents within this 7 trading day period to give a 64% gain when Alibaba fell by 10%. So your gains on this IXJW can be used to offset your paper losses on your overall investment portfolio of Alibaba stocks. For those who are more active and more sophisticated investors out there who know how to hedge properly and how to trade both sides of the market, you can use the short DLCs to make nice gains on the back of any corrections in the underlying assets. Okay, so hedging is the last example over here. Let's go into the most important feature of the DLCs, the compounding effect. All right, so the compounding effect can work for you or against you. So it's very important that you understand what the compounding effect feature is. In a nice trending market, the compounding effect can work for you very well. It can give you more than that 5 times leverage, more than that 7 times leverage in terms of a trending market, whereby it won't work well for you in a volatile or sideways market. So in this example over here, let's look at the table on the left. The table on the left, you will see that the underlying is up by 1% on day 1, up by 2% on day 2, and up by another 2% on day 3. Every day, my 5 times DLC, long DLC, will give you that 5 times exposure, right? So day 1, my 5 times DLC is up by 5%. On day 2, my 5 times DLC is up by 10% because the underlying is up by 2%. And then on day 3, my DLC is up by another 10% on the back of underlying going another 2%. So every day you get a 5 times performance every day on a coast-to-coast basis. But cumulatively, the underlying has gained 5%, but my 5 times long DLC has gained 27%. All right. So 5% times by 5 is 25%, but my DLC has given me 27%, extra 2% there, due to the compounding effect feature of the DLC. All right. So this compounding effect feature of the DLC will give you more than a 5 times leverage if you manage to capture a nice trending market. Okay. Because the compounding gains, every day your gains and losses are locked in. So your 10% gain on the day 2 is based off a higher base of $2.63. Your 10% gain on day 3 is based off a higher base of $2.89. Every day your gains are compounded to give you more than that 5 times leverage. All right, so you can capture a nice trend, you will get more than that 5 times leverage or more than that 7 times leverage. Okay, but compounding effect, like I said, works well for you in a nice trading market, but it doesn't work so well for you in a volatile or sideways market. All right, so in this example over here on the right, the underlying is up by 2% on day 1, down by 4% on day 2, but rebounds back by 7.31% on day 3 to give an overall cumulative return of 5.08% across the 3 days. What my DLC, similarly, every day I give you that 5 times performance, so it's up by 10% on day 1, down by 20% on day 2, and up by 37% on day 3. Every day that 5 times performance, but cumulatively over the 3 trading days, my DLC is up by 20% only, less than that 5 times performance, right? 5% times 5 by 5 is 25%, but here the DLC is only up by 20%. So, this is where the compounding effect will not work well for you, or will not work so well for you, where it's a more volatile market or sideways moving market. And this is the one very important reason why the DLCs are not a buy and hold instrument and not a long-term trading instrument. It is a short-term trading instrument because in the long term, markets don't go in one direction only. It doesn't trend up all the way in the long term. In the long term, markets will come back whatever goes up must come down, whatever goes down must come up. It's mean reversion, etc. In long term, markets will go in one direction, and therefore these DLCs are not suitable for a buy and hold long term kind of strategy. Okay, it's a short term trading instrument. All right, some examples over here on compounding effect. The DLCs are exchange listed versus other leverage products out there like CFDs. All right, it's not a margin product. Okay, it's not a margin product like the CFD. So there's no risk of margin call. If you put in $1,000 to buy a $1,000 worth of the DLC, the most you can lose is that $1,000. All right, you will not be asked to top up your margin to top up, or you won't owe the broker anything, because this is not a margin product. Even if the underlying moves adversely against you, you will not lose more than your initial capital or your initial investment sum into the DLC. All right, compared to other margin products out there like CFDs, etc. And I mentioned just now that the DLCs are not an option, not options and not warrants. So there is no optionality impact. There's no time decay, no implied volatility, etc. Okay, so you can find out more information about this as well in our website. I want to take the last 5 minutes that I have to go into our website, dlc.sociegen.com, to show you guys where to find more resources on the DLC. All right. So I hope you can see my screen. All right. So my screen, dlc.sociegen.com. That's our website. All right. So this is our website, dlc.sociegen.com. Okay. So you can find more information on the DLCs on our website, dlc.sociegen.com. You can find more information under our education tab, where you have a lot of resources on what the compounding effect is, how it's different from other leverage products, what's the airbag mechanism, which is another feature of the DLCs. Please read up on this information before you trade the DLCs. You can also find videos on the DLCs, how to select the right DLC for your target exposure. It's our most popular video, so please do try and watch it before you go and trade the DLCs in the actual market. So there are a lot of videos here that you can use to learn more about the DLCs as well. FAQ page as well, so some of your questions might be answered here. But if in any case that you have any questions or any feedback on the DLCs, you can always just on our DLC hotline at the top right hand corner of our website, 6226-2828. My team and I are on standby throughout the trading day, SGX market hours, to answer your call, to answer any feedback or any questions that you have on the DLCs. Please do feel free to call us at 6226-2828 during SGX market hours. Okay. So under education, you can find a lot of tools and information. Under the products is where you will find to search for your right DLC for your target exposure. All right. So you can go under products here, search for the DLC that you want, find the 4-character stock code. If you find it, the one that you want, and you select the 4-character stock code, and then you go into your trading platform on your broker trading platform, and you can buy and sell the DLC over there at your broker trading platform. All right. So before I end off, I want to highlight to you guys a very more practical tip on how to select the right DLC for your target exposure. So say, for example, I'm looking for Alibaba. I want to gain exposure to Alibaba, and I want to long Alibaba. All right. So I want to long Alibaba. I will select the long Alibaba. So all our single stock DLCs are at 5 times leverage, so I don't need to choose a leverage factor. But if you are looking at the index underlying, you can choose 5 times or 7 times leverage. All right. So over here, you can see that that SocGen we have 5 Alibaba long DLCs. All right. So for those of you who might be wondering, so which Alibaba long DLC should I trade? Right. So just to put it very clear first, all 5 long Alibaba DLCs will give you that 5 times performance of the underlying stock's daily percentage performance. All right. So if Alibaba goes up by 1%, all 5 Alibaba long DLC will go up by 5%. All right. Times by 5 that of the Alibaba stock price performance. But the difference is that they have different sensitivity. All right. So the sensitivity column on the right over here, the smaller the number means that it's more sensitive to the underlying stock movement. All right. Because sensitivity over here means that how much must the underlying stock move before my DLC can move 1 tick. All right. So that 1 tick could be at 1/10% or 5 or half a cent or 1 cent, depending on the SGX tick schedule. But sensitivity here refers to how much must the underlying move before my DLC can move by 1 tick. All right. And the lower the number here on this column sensitivity, the more sensitive the DLCs are. All right. If in doubt, the most sensitive DLC is highlighted with the red star indicator over here. All right. So if in doubt, always go for the red star indicator. That will be the most sensitive DLC and also the right DLC to trade to get your target exposure if you want a long Alibaba DLC. All right. So at 90 cents level, this DLC, they all have different price ranges. All right. So you want to choose the DLC that is higher price, which is more sensitive. The lower price DLC, like 2 cents, 3 cents, please do not trade those 2 cents or 3 cents DLCs. All right. Those are very insensitive to the underlying stock movement. Okay. So go for higher price. Lower price doesn't mean it's cheaper. All right. This all 5 DLC will still give you the same 5 times performance, but you want to choose the DLC that is the most sensitive so that you can have the most widest trading range to get in and out of a position. All right. So this Alibaba long DLC DO5W is the most sensitive DLC. And if you're long DLC, you want to long on the Alibaba, you want to go long on Alibaba stock, you would choose this Alibaba long DLC, which is the most sensitive Alibaba long DLC. Okay. So do try and go for a higher price because they are more sensitive, and that you'll find that you have a better trading experience trading the DLCs if you go for the more sensitive DLCs rather than just based on the price of the DLC. All right. So cheaper doesn't mean better. Higher price is actually better for the DLCs. It's more sensitive to the underlying stock movement. All right. So if in doubt, always choose the one with the red star indicator. Okay. Always choose the one with the red star indicator for the most sensitive DLC. All right. So do explore our website dlc.sociegen.com. I hope that you can learn more about the DLCs. And if you have any questions at all, please do give our hotline a call 6226-2828 to come back to us. My team and I, we are always on standby during market hours to answer any questions that you have on the DLCs. All right. So in the tournament itself, I hope everyone has participated in the tournament. All those who are here, please actively trade the DLCs on the tournament. Try out our SocGen DLCs on the tournament. Have a feel of it. If any questions at all, you can always give us a call on our hotline. So join in, and I hope that you guys can be a winner in this DLC tournament. So far, look at the returns of the DLCs. Single trade DLCs. Just by making one trade, the profit is at 90%, 70%, 50%. So it's, of course, there are also losses of that similar magnitude, if you got direction wrong, but that is what the DLCs can offer you. All right. So if you are comfortable with the risk, this is what the DLC can give you in terms of the returns and in a short period of time. All right. And these people who have successfully traded it, albeit in a virtual simulation platform, but they have chosen, they have made very, very good trades to gain that 50 to 100% returns in a day or in a short time. All right. It might not be a day trade, it might be a few days, but that is a very short trade for that 50% to 100% gain. All right. So do check out that. And also, if you are done trading a simulation and you want to jump right into actual trading, do look out for our promotions with Phillip Poems, with Mumu. We do have promotions ongoing with them for the DLCs that you can check out as well. I think if you click the banner, you should be able to enter the promotion page to find out more. So if you're ready to jump into actual trading, go ahead. But do make use of all the promotions that's ongoing on now to make the best out of it. All right. So I'll end here. This is a very short introduction, so I don't think you'll be able to learn everything about the DLCs, but I hope through the training tournament, simulation tournament, you'll be able to learn more about the DLCs as you trade, on the job learning per se. But if you have any questions at all, please do give us a call at our hotline or write into us, and you can find more information on our website, dlc.sociegen.com. All right. So we'll post the link of our website, URL dlc.sociegen.com, in the chat as well as in the post for this webinar session. All right. If not, I'll hand over the time now to Robin, who has been trading the DLCs for many, many years. And he has had a lot of success cases. I believe, if you ever talk to him personally, a lot of success cases. And he's here to share with you guys more about the underlying, the outlook for the Hong Kong and the US market. And also as well as some of the DLC underlying stocks, his technical outlook, and how he will probably use the DLCs to trade this underlying. So thank you, everyone. And over to you now, Robin.
Okay, thank you, Marcus. Let me just get my screen up.
I think I can see your screen. Yes.
Okay, hang on. Let me just get my screen up here. Sorry, I just lost it. 1 second. Hey, can you guys see my screen?
Yes, Robin can see.
Okay, great, great. All right. Good evening, everyone. Thank you for joining this very exciting session. I think most of you would have known me because I am a veteran in this market. And if you have known me well enough, you will know that I'm one of those guys that are not very conventional. So in my outlook of the market, which means, I don't normally follow the toe, right? So most analysts, when the market move one way and market is up, everybody says up, and they will also say it's up. When everybody says down, it's down. No, but I don't do that, right? So what I do is I believe in my own analysis, fundamental, both fundamental and technical. All right. So before we further ado, let me just tell you about briefly on the usual disclaimer, and that is whatever I'm going to share today is my view, nothing to do with Soc Gen, nothing to do with Phillip Securities, where I come from. Okay, so let's hope we all learn something from tonight. And this is what I'm going to do tonight with you. All right, so a very short intro about myself. I think I made the headlines in the newspapers in 2008. Most of you may not even have started trading in 2008, so you know how old I am. So I made the headlines in 2008, made a couple of $1 million, shorting the market, which, at that point of time, a lot of people, never heard of short before, all right? But let me just tell you, right, that I was like given a very unique opportunity to short the market, while previously it was not possible. All right, so in Singapore, it was only long, you can only buy, you cannot short the market. Our market is not sophisticated enough for shorts. And then this thing about, then we allow shorting. The SGX started to bring in derivatives, all right, we can short. And DLC is one of those derivatives where you could use, all right, to short the market if you think it is bearish. And if you think it's bullish, you can use it to long the market. All right. So at that point of time, it was the first time SGX introduced derivatives where you can short. I used those derivatives. I shorted the market, and in a year, I made like $2 million. And so this article, is about me calling the three accurately, all right, predicting the last three crashes. All right, and one of which is 208, 220, and 222. All right, so I accurately predicted those crash. So I was thinking, when I was asked to speak on this program, I was thinking, what should I be talking to you about? And then I'm thinking, well, why don't we just, why don't I just tell you, the methodology I use to call a market top, a market bottom. I think that will be interesting. So today I want to share how I call market tops, how I call market bottoms. So like I was telling you, right, I don't toe the line, all right? So I believe only in my fundamental analysis and my technical analysis. All right, so today I will share with you, I don't have time to do a lot of fundamental analysis, which I do with my group. We have a very big family here. About every time we meet, it's like close to 300 people coming in. We meet the SGX auditorium. We meet on Zoom. Our DLC family, we meet here like almost every month. We meet. All right. So if you want to know more about our DLC family, I'll talk to you later how to join it. But in the meantime, let's just press ahead with the topic proper today. All right, so a lot of people, the reason why I want to bring out, right? So I seldom like talk about, I'm bringing this newspaper cutting out or this article out about me being a short legend, like a crash legend. Crash legend seems to suggest that I know nothing about selling. No. I do buy and sell. All right, and when the market is very bullish, I will not sell. All right, when the market is on an uptrend, I will not sell. Only buy. When the market is downtrend, I only sell. So do I short anything now? No, zero, because the market is on an uptrend. All right. So, but then, okay, I want to share with this chart, right? This is my proprietary trading model, which I teach in my classes. So I've trained thousands and thousands of students over the last 20 years. All right. And if you are one of my students, you understand this, how it works. But anyway, all right, let me just show you why, I am kept awake nowadays. Always expecting something to happen tonight, all right? But, it doesn't happen, but it's going to happen. And I think it's going, we are going to have a crash in 2024, all right? So I may be right, I'm not right all the time, but I've been right the last 3 times, all right? I may not be right all the time, but I believe it's this year, okay? Why? All right, so I want to show you the chart, all right? So this is my proprietary trading model, and how it works is that, it tracks a long-term trend. So the minute I get hold of a long-term trend like here, all right, so this trend line is my long-term trend. I got it. I mean, you look at a chart, there's so many trends. You need to find one good one that is validated. All right, so you need to validate a trend. So when you have validated a trend, right, you start, all right, formulating your trade plan. And so this is my trade plan. And you can see, right, in this trade plan, it works very well for, if you look at it, it's like since the last 20 over years, it's been working very well. All right. I just want to be showing you that so those calls, right, that I'm telling you, they are not like, something that already happened. Then I'll tell you, oh, I look back, it's already happened. I tell, no. I always give calls before it happens. And if you don't believe, you just have to Google. You go to my website, you go to my blog, you go to my chat group, and they're all there. All right. So basically, right, in the last 4 years, all right, I called the pandemic crash. Which happened in 2020. So before it happens, so I was like, okay, 2 months early. So before it happens, I say, it's going to crash, it's going to crash. All right. So 2 months later, it crashed. All right. And it crashed. It went, you look at that, you saw that? This is where it crashed. All right. At this trend line here. And after that, right, when it went back down, I also caught the bottom. So that was the bottom, pandemic bottom. How do I know? It is all in the charts, all right, in the trend line. They capture everything. Okay, so after that, the market started after the pandemic bottom, and the eased monetary policy, interest rate went to 0. They started printing a lot of money, and the market started running up. And all right, so the market passed the blue line, 1 blue line, 2 blue line, no shorts. They're still very very strong. We have a strong uptrend. And look at that. The minute it hit the next blue line, I was calling a short already. All right. And then it retraced. All right. Two channel down. Right. And that was the bottom. Okay. And then, okay. So I was like not talking about market crashing for a long time, but today I'm talking about the possibility that we could get a market crash. I cannot predict the days and the hours. I cannot predict that. All right, nobody can do that. So the most of the previous crashes are always 2 months early. So I'm not sure whether I'm going to be 2 months early this time. All right, but what I can see here is that the prices are going to the top, all right, of my channel, all right, this trade plan, which I'm pretty sure it's correct because I've got it right the last 3 times. I think it's correct, and it could pick somewhere between this S&P, right? S&P, right, could peak between 5,007 and 5,580. All right, but doesn't mean that when it hits the level, it's going to crash, you know, the following day. No, all right, it can hang around there, you know, plus minus like, you know, 5,000 to, you know, it may hang around between 5,000, 5,007 for a while. All right, and when nobody's least expecting a crash, it can become. So most of the time happens like that. Okay, so look at this chart. All right, so this is the reason why today I want to talk about crash. Okay, so let's talk about a little bit about why we've seen around the world, right? On 5th of August, we saw the Nikkei crashing like almost in one day, right? On the 5th of August, it crashed 13%, something never seen before for a long time. And on that day, you know, the volatility index spiked, market crashed all over the world globally. And we all thought the crash coming, right? But after the 5th of August, we saw the worst and it has been rebounding. And there are two reasons, all right? The US economy and the unwinding of yen carry trade. Okay, so I won't go into, you know, all the details of yen carry trade, but that was primarily the two reasons why the market fell 5th of August. All right, so the market, right, has been very resilient and very strong for a good reason, and that is because, you know, that profit, all right, coming from US corporates, all right, US companies has been strong, all right, and therefore that was like quite reassuring to the US market. But you know, strong doesn't mean, you know, it cannot fall. So if you look back into history, and this chart will show that most recession happens, all right, when markets start falling. All of a sudden, it was like good, and all of a sudden it started falling. All of a sudden, unemployment rates started climbing very quickly. All right, and then the recession just comes. All right, so recession comes with little notice. All right, that is what history suggests. Okay, so this is what it is all about. All right. So what I want to show you is 2007, all right? So that was the point of time I was there and I called the shots, all right? So I was looking at this chart too in 2007, and I think the shot was coming. And this is something that I want to just show you too, how I analyze the market. So in 2007, right, we had the Fed fund rate, all right? So the Fed fund rate was on the way down. Okay, the unemployment rate. Sorry, let me see. Okay, yeah. So the Fed fund rate, unemployment rate was down. All right. So the red is the unemployment rate, and the blue is the Fed fund rate, which is the interest rate. Okay. So and then what happened was that just prior to recession, before recession, all right, the unemployment rate started climbing and the Fed fund rate started falling. Okay. And then when it happens, right, when this crossover happens, right, recession just came very fast, and then the stock market crashed. And that was the 2008 great financial crisis. All right. So fast forward, we are here, 2007. All right. And that is, close to 20 years. Okay, so we're here, 2007. And what I'm saying is that the market looks something like that. All right, looks something like that. We just before the recession. So now we have the unemployment rate are very low, interest rate very high. And you could see from the data that the unemployment rate is climbing. All right, and the Fed fund rate, as the Fed has projected, they are cutting, which is coming down. So will it happen again? We don't know, but the macros, all right, is that the macro is that the reason why the market has been so strong, all right, is because people know there's going to be a slowdown in global economy, all right, but they are not sure whether we are going into recession. The bet, right, the current bet is that we will only go into a slowdown, and therefore, you know, the market is happy. Slowdown, corporate earnings are going up. You know, we have a very, very slow, mini slowdown. It doesn't affect a lot of people a lot, you know. So that's why the market is running, all right? But if the slowdown narrative, right, begin to change, right, to recession, all right, that is a concern. And that was what happened the week before 5th of August, all right? The unemployment started shooting through the roof, all right, and people got worried the market got sell down, all right? So why the market is rebounding now, all right? Last week, the retail sales data went up, the jobless claim went down. So people just took 2 points and they're saying, hey, you know, no more problem, all right, no more recession, and therefore the market go up. Okay, another story why, all right, market has been going up was because, going down, all right, last week was because of Berkshire, all right, they sold 50% of their Apple, all right, from 50 to, they were holding 50%, they sold down 20%, and therefore they're left with 30%, and that is one of the biggest, all right, sell. All right, so now Berkshire is holding only 2 big stocks, all right, big, all right, in percentage term in their portfolio, and that is Apple and the Bank of America. Okay, and you look at this, all right, does Warren Buffett know something that we all don't know? His cash value, right, is the highest of all time. He is holding a record of 277 billion. He don't want any more stocks, all right? He don't want a lot of stocks now. He want a lot more cash. Okay, so Apple is, you know, when I look at it now, Warren Buffett may be right, because according to my chart, right, it seems that Apple has also topped already, all right, 237. It's not going higher than that, all right? If it goes close to 237, it probably will have a double top. All right, so okay, so global market, Black Monday. Okay, did I see it coming? The 5th of August, did I see it coming? Yes. All right, I warned my community that something is happening. Why? Because Nasdaq, it was at inflection point. You see Nasdaq, the 2 orange line was on an uptrend. All right, and you look at them, they were hovering just below the Bollinger Bands. All right, and what happened was that Nasdaq broke the uptrend, and I was on my charts. I look a lot on trends. I not only look at trends, I look at volumes, and that's why when I saw this volume breakdown, you see this volume, a huge volume you never see before on Nasdaq. When it broke below 19,600, which is below the trend line and the volume, I say the market has got a chance to crash, and crash it did, all right, but only momentarily, all right? So you went down quite a lot, all right? You all know the Black Monday, of which is 15 on Black Monday, all right? And it crashed, right? So anyway, so the VIX, right, since the crash on the 5th of August, had, it swing all the way to 61, and 61 is like the largest in the last 30 years, all right, since 1990. So that is the largest VIX, all right, gyration, 61%, right, in the last 24 years. You know, boy, no, it's 34 years. So most people thought, all right, that with this kind of volatility, one of the highest in history, the market should be crashing, but it did not, right? It rebounded, right? So we came from extreme greed, all right, to fear, to extreme fear, and then we are back to neutral, all right? So now we are in neutral. Where are we going from here? All right, so I just want to share my Nasdaq trade plan, and that is updated as of today. But before I share my Nasdaq trade plan, right, I remember I told you that my strategy is all about price price action and volume. So I want to show you, right, the volume part of it. So for you who are very new to technical analysis, all right, this can be quite daunting, but don't worry, it's quite simple. All right, so this is my secret. All right, I'm sharing you my secret tonight. Okay, a lot of people pay a lot of money, all right, to come just to know the secret, but I'm sharing you tonight. So try to grasp this thing that I'm trying to tell you. Okay, so let's look at NASDAQ 3-month volume profile. All right, the 3-month volume profile tells us that the most volume, right, was done between 19,975 and 19,973. Are you guys following me? If you are following me, say yes. Can you say yes on the chat? If you're following me, all right. I'm not very. Sometimes I'm not sure when I go so fast. I'm not sure. Okay, great, Timothy. Thanks for that. Okay, so some of you are following me. All right. So now look at NASDAQ. All right, NASDAQ. So I basically went back and looked at the NASDAQ volume profile. So when you look at a chart, right, you can see two types of profile. All right, one is volume and price distribution profile. Another one, right, is just a daily volume profile. Okay, so this is one of the best secret I know. All right, 40 years in the stock market. And this volume profile you see, right, says that, you see this high volume bar? All right, if you look at the charts, it is at 19,640, all right? But now, in this volume distribution, it's 19,673. So it's about there. That is why I say that when the market breaks, okay, the market breaks, there could be a crash. And true enough, you saw that, when it breaks this level, right, it went all the way to 17,800. Can you imagine 2,000 point fall, which is 10% fall of the NASDAQ? The minute it breaks 19,600, it fell. All right. And what's happening now? We are climbing back exactly here again. See that? We are climbing back exactly to this congestion here. All right, this area. All right. So, okay, so volume, right, profile, if you use it in isolation, it's not going to work so well. So you need to use it with your trend analysis. Sorry, I think I just, sorry about that. Okay, let me just find my charts. Okay, here. Okay, so you need to use your trend analysis profile. And what the trend analysis profile is telling me, all right, is that NASDAQ, right, at the current level, maybe plus minus 50 to 100 points. So NASDAQ last done was 19,825, all right? So what I'm saying is that it could go as high as 19,975, and I don't think it's going to go any higher than that, all right, in the current run. And then I think it could like do a correction down, right? But anyway, we are still on uptrend. We are not on the downtrend. But I think we could have seen the top, all right? So you look at my cursor here, we could have seen the top according to my trend analysis. Okay, so what I want you to be watching also is that NASDAQ, right, seldom, all right, drop, all right? Seldom drop like, this amount, right? Look at my cursor, this amount below the 50-day moving average. So most times when they drop, they only drop like maybe about 500 points, below 500 points, all right? In this case, it dropped about 1,000 points, all right, below the 50-day moving average. And now it's coming back down again. And what I'm saying is that, all right, you have a 1900 here, all right? The volume support, 1900. Let me go back to it again, all right? See that? 1900. Okay, so you don't get bearish until 1900 breaks. Okay, the first time you get bearish, but before that, no shorts. Okay, no shorts. All right, wait for unless it breaks 1900. So that's how I look at NASDAQ. We are close to the peak. the reason why I say it's close to the peak because this chart and also the S&P chart that I showed you. Okay, so let's go to NVIDIA. All right, the reason why I want to talk about NVIDIA tonight, all right, is because the results are coming. All right, NVIDIA on the 28th, right? Was it 28? Yeah, 28th of this month, NVIDIA. Okay, and NVIDIA, it has fallen and has since 15 August, right? He has gained back about 35% from the bottom. All right, if you look at this basic chart, it is one of the it's the best performing chip stocks, right? So you want to buy NVIDIA, you want to bully your chips, you buy NVIDIA. But valuation wise, you look at them valuation wise, price to book, price to sale, they are all very close. They are all above average or way above average. Okay, why is it that NVIDIA is this coming result reporting is so crucial? All right, it's because the market, right? The market has sort of believed, right, that the NVIDIA's coming results is going to be good. So if you look most analyst report, they are saying, it's going to be very, very good, NVIDIA. But what I want to warn you, right, is that the Magnificent Seven tech, right, the big techs, right, recently their results, after most of them, all right, Amazon, Microsoft, Alphabet, most of them, after the result, right, they went below 4%, all right, so that is not good. So that is the previous trend. So I'm not sure about NVIDIA, okay, but you have to be watching out, all right. So NVIDIA, basically their business, they are very rooted in chips, high-tech chips, A1 chips, okay, and the sectors, they are very the business sector, they're very much dependent on their profits, is the data center, okay? Data center, and in Q1, the data center made 80%, profit went up 87% to 22.7 billion. Okay, and their major customer, it is Amazon, Microsoft, Alphabet, all right? And that makes the substantial database center. But all this, right, in the last Sec2Q report, all these three companies, all right, they are saying they are also going into AI power chips. And they are expanding their data center, all right, good and bad. One, if they continue to expand their data centers, they will need more chips on NVIDIA, all right? But in the longer run, if they make their own chips, it's not good for NVIDIA, all right? So which means what I think is that within a year or so, NVIDIA edge in the chip market would be lost, okay? So that is the story. And the headwinds, all right, recently why NVIDIA fell was because they said there could be a 3 months delay of their chip, and also the U.S. sanction in exporting advanced data chip to China. All right, so that is the headwind. So NVIDIA, right? Bloomberg says, wow, next is going to test next test for the market rally. All right, so whether this rally is going to sustain or not, Bloomberg says depend on NVIDIA. So you have to know, you have to stand by. You have to got your own calls, on conviction where NVIDIA is going. But I hope this seminar will help. So Goldman Sachs, all right, said trading desk called NVIDIA the most important stock on earth, and this is what I agree with them, all right. So when NVIDIA go up, next day go up. When NVIDIA go down, next day go down. Okay, so but what you could see is that one chip stock, all right, which is a super microcomputer, they are also in this high-tech chips, right? Their results are not too good, all right. When they announce their result, their price, the stock price, all right, of their stock price went down 30%. Okay, now, so we finished a little bit of NVIDIA fundamental. Now let's go back. Let's go to the charts. Same thing. Let's go to the price. Oh, sorry, the price and the volume profile. So here, right, in the last 3 months, the volume profile suggests that the highest volume is done at 114. Okay, here, 114. Can you see that? 114. So how does that work out in the charts? So now NVIDIA is last stand at 128. So 124, 114 is here. All right, right at my trend line here. The minute it breaks above 114, it flew. Look at that. So the minute it went 114, it went to 128. But on the chart, it's hitting a resistance line on my trade plan. Okay, and all right, so nothing goes up forever. And you know the last drop in NVIDIA, right? It went to all-time high 141. It dropped 35%. I know, you know, this fall, right, would have jettisoned a lot of people. A lot of people would have flushed out already. But what I want you to see in this chart, right, of NVIDIA, is that something bad has happened. All right, why? Which I think, you know, is like something. It's like, you know, you have a full waterproof, maybe a bag, and you know, it's like the waterproof bag has burst. All right, you see this? All right. So you see NVIDIA, right? Since November 22, you see NVIDIA, the share price seldom dropped below the 50-day moving average by this amount. And this time round, it fell. Okay, is it telling us something that we don't know? All right. So there was a 35% drop, and now it has gone up and it is hitting. So when I look at this trend line, it seems to suggest there could be a correction coming. So I'm not sure whether the correction is going to come from the results. I'm not sure, but I'm telling you a correction could be coming for NVIDIA. And you will only get bearish on NVIDIA if it breaks 114.68, right? That's where the huge volume, the largest volume accumulation in the last 3 months, okay? So that's NVIDIA. And like what I said before, the tech giants, right? In the month of July, the tech giant reported results, and most of them fell more than 4%. Okay, so that is my part on US, and I've overshot my time. Okay, so I tell you what, I'm going to rush. I'm going to quickly go to China, and I'll skip the macro on China, all right, and go right into technicals. So Hang Seng Index. Here, we start with volume. Always start with volume. You can see Hang Seng Index, the volume, right? The huge volume was done here, 1864 and 1805. And this volume is done with this type of volume profile. But what about the price distribution volume profile? Is telling us, all right, that there is an overhead resistance at 17,850. And we are currently doing 17,600. So it's like 250 points to go before we hit the rock. Okay, we hit a hard place. All right, so that's how to read it. All right, the chart. And you don't want, all right, you look at the volume distribution here at 16,580. You see the last drop, it went exactly, or if not, just very close there. And that is why the volume distribution is so important indicator to be watching. Okay, so now I want to show you a macro picture of Hang Seng. So I know a lot of people are quite bullish on Hang Seng, not because of the fundamentals, but because it's dropped so much. And they are saying, you know, most stocks already dropped between 50 to 70%. Can we buy those blue chips? Can we buy those banks? Can we buy those property stocks? Can we buy those high-tech stocks? The answer is not yet. All right, not yet. Why? All right, let me just show you. All right, the macro, right? So always look at the big picture, and this is the macro. Always look at the macros, and the macros, right? If you look at Hang Seng, and you know, the minute it dropped below the lower band of the Bollinger, right? The minute it dropped below the lower band of Bollinger, it stays below for a long time. All right. And there's only one time that it quickly moved above the Bollinger Band, but then it quickly fell below again. So this time round, right, you know, you look at it, it went above the Bollinger Band, hits the top of Bollinger Band, and it's like, if you look at it, it's still on the downtrend. And what I want you to be watching is that you know, it shouldn't drop below this Bollinger Band, middle band again, all right? But what I think the likely scenario is like this, right? It goes down, it goes up, and after a while, it will dip down again. So that's my prediction. Why? Because of this. All right, there's a huge overhead here. Look at that huge overhead here, which is not easy to cross, particularly because the Western funds are not in it. So the Western funds are all selling. And you read the news, they're all selling. They are not buying. The Western fund is not buying. I don't know how it's going to go up. Okay, so Hang Seng short-term view, look at that, all right? So short-term is still on the downtrend. It's not broken out of the uptrend or the downtrend. The downtrend, all right, is the channels, right, that sort of covers the downtrend is these two orange lines, all right, and it has not broken up. So it went exactly to where the bottom of the downtrend tells you it broke up, all right, and you could see this downtrend line, intermediate line, it went there, it tested, it went back down, and today it went back up again, and I think it's going to test this uptrend at 1784. All right, 17,840. And if you can break above 17,840, you will go to 18,806. If it breaks above 1806, then it becomes very, very bullish. All right, and it will go, all right, to close to 1900. All right, so at the moment, it's still on a downtrend, provided it breaks above 17,850. Okay, I hope you're clear about it if you are trading Hang Seng. Okay, so all right, so this is a chart that I posted. So that's what we do on our chat group, right? Is I will tell you about like exactly what I talked to you in the seminar. In fact, every day they have a seminar like this. I'll post trading ideas. I will post where market is heading, outlook of the market, whether it's Hang Seng, whether it's Nasdaq. And this is what I posted, all right, on the chat group just on the 16th August, all right. And I said, hey, you know, BYD bottom already, all right. And at that point of time, it was at 216, and I said it will go to 227, all right. So today we hit 227 BYD, all right. So we hit one target. So if it goes above 227, we could see 239, and that's where I will be a seller, all right, for 239. So that is the kind of trade plan that I'll show you on my chat group. So if you have not on the chat group, you know, please join the chat group to get real life market analysis and market outlook. All right, so I will not share this because of time. All right, so I think I've overrun by 15 minutes. I'm sorry about that. But what I want you, to know is that you have something very, very exciting. Don't trade alone. All right. So I have a trading community that is here to help you, and I would think that my trading community is active ones, right? They are the biggest, all right. If you don't believe, join our chat group. Every month we have close to 300 people attending. All right. So tonight you see that, you know, we only have 40 people, 50 people, right? So we have 6 times the number of people. And if you visit our meetups, right? Every month we meet up, and at the end of every 3 quarters we meet up physically, right? Where we shake our hand, one another's hand. We get to know one another. We have a meal together. You believe that? All right. Okay. Of course, this meal is sponsored by Societe Generale. All right. So we have meal together. We eat together, and we are having a lot of exciting things coming up. Where old friends meet, traders talk to traders. All right, they meet up face to face. Very exciting. Please join our chat group. And if you don't know what to get out in our chat group, all right. So we that's what I said. You know, we give you real life market outlook, real life market data coming from announcement of whether it's central banker, whether it's companies. We do that. So every day I talk about a typical day. I talk about how Hang Seng will move, intraday trade. So there's a lot of people like to trade Hang Seng intraday, and I guide them, all right? So if you like, so this is what I do. I give them a trade plan. Every morning, we give them a Hang Seng trade plan. All right. And we tell them, okay, this morning, Hang Seng is going to go high, so high, and you go low, we go so low. All right. And so this is a chart that if it hits a level, I'll post it. All right. So I don't have time to go through so many things. All right. I have a blog. All right. www.robinhosmarttrade.com. Go to that if you want to know more. All right, about the courses I have. Facebook, please join my Facebook, free. All right, RHO Trading Community. We got over close to 6,000 people. All right, a lot of people. All right, on the trading committee. Please join us. Okay, and last but not the least, all right, this is my contact number and my team. Yun, Juren, they all help me in this business. We every day, we work very hard full time, all right, on the chat. So these are people that I get to help me, all right, to give you information and guide you in your trading, all right, and it's free. Okay, we don't charge you anything, all right, and okay, so SocGen promotion, one of the best promotion, all right, get $128 dollars, all right, of cash credit if you trade DLC. SocGen DLC for the first time if you trade, and it lasts from 12 August to 30th September. All right, all you need to do, execute any 2-buy trades online. Okay, so if you don't know what to do, go to this website, www.poems.com/SG promotion. You can do it through any account. Okay, all right, sorry for taking up so much time, overrun by 15 minutes. Thank you guys, everyone, for joining us.
Thank you, Robin. So ladies and gentlemen, we have come to the end of this webinar. A very special thank you to our distinguished speakers, Marcus and Robin, for their insightful sharing session. So last but not least, for those who have not signed up for the active trading tournament, this is your call to head over to the Investing Note website to sign up now. Once again, thank you everyone for joining us today and have a great evening ahead. Goodbye.